Good turnaround Tuesday, everybody. Let's have a great day. Thank you, Craig. I'm fine. In fact, I'm as brilliant as a diamond. You better put on your shades, Craig. How you doing, Dan? Okay, so anyone who took the recommendation shorting Dixie from 93.70 to 94, I'd be putting at least half in the bank here. Give me Y if you're with me. This was my target. It's a weekly line. I have some confluence there. I believe, yeah, with the 4 hour coming in here, just in case there's another run. Can't rule anything out, just in case they want to push it one more time. We start closing under 93.09. You could reinstate, either sell another rally or sell a failure, false breakout back under 93.06. Everyone with me on that? Thank you, Mamouche. Okay. So, because it is a Tuesday, I can't short the euro because, maybe yesterday's reversal is going to hold. See, it's a pretty nice candle yesterday. But at the same time, when I look at it, I could also see this as being 1, this as being 2, and maybe one more washout. I think someone tweeted to me some type of pattern. I don't know if it was a Gartley, would include one more low. So part of my intelligence gathering. But my preferred short today is something that's pretty crowded, and turnaround Tuesday candidate is oil. Okay, so here on the 4 hour, looks like a wedge, and you could call this 1, 2, 3. Shows up a little better on the 1 hour as 1, 2, 3. But here on the 3rd, we could get one more push up. So if you think it's peaked, you put on a small piece and then you put on another piece at 72.80. So at new highs, I'd look for a short up here in crude, maybe risking $1, because at the minimum, I think that we're due for, some type of correction of this move, right? And then back under 71.33, it could get deeper. So in the face of Mike Pompeo saying that we're going to crush Iran, looking for a reversal in the energy. I think when Raksha was on, she talked about time equilibrium between the low and the rally that we've had here. So I think it's this week. I'm not saying we're going to have a crash, but to me it looks like a rising wedge. Where could you anchor it? Maybe anchor it here or here. But anyway, I think this is a reasonable target. Back to 67, risking $1 to make 5. That's my turnaround Tuesday candidate. I'd like to see S&Ps finally break through these highs, but not sustain them. I'm thinking maybe we could get to 27.58 or so. Might be worth taking a short there. The yen, everyone's tempted to top pick it. It is Tuesday. Let me take a look. I still don't like this 1 hour high. Of course, it diverged here. I think it's probably, I'd look for one more high in the end based upon this reading here. And we are going for the gap here, I think, but it'd be more constructive if we don't fill the gap. Everyone thinks you have to fill gaps. It's actually more positive if the market doesn't fill the gap. So yen's not ready yet in my view. Any questions on anything I've talked about? We have an excellent guest today. Graham is going to be with us. Graham Kirbishley at Trading Motive. Anyone ever hear of him? He's an Aussie, I believe. So He'll be burning the midnight oil, most likely at the top of the hour with us. I know a couple of the guys are getting ready to travel. I wish Stell and Steve a safe trip to Cyprus. And Blake, what are you thinking going into? Oh yeah, Ziggy's asking me, and maybe you guys know. Blake, I don't think you heard the interview with Danielle DiMartino, but she was talking about, people are paying attention to the wrong index, the VIX, that there's some type of volatility index that measures bond volatility. It sounded like Mood or Moog, but it started with an M. Do you know what it is?
No, I don't.
Okay. Anyone in the room know? It's some kind of volatility. That's what she said. Move. Okay. DB knows everything. You ever hear that? So she's saying pay attention to the move index. So I don't know where to find it. Where do you find that, DB?
I have to look on Bloomberg to see if I can find it.
Yeah. Anyway, that was her key piece of advice during the interview. We had a very terrible connection during that interview, but she's a gal, Blake, that wrote the book Fed Up. She gets a lot of CNBC time because of that. She worked for Richard Fisher at the Fed for a while. So, yeah, I'm going to look into the move.
Oh, yeah, it's the here it is. It's the move Merrill Index, Merrill Lynch option volatility index for the bond market. So let me see.
Oh, there you go. Okay.
Yeah.
So the VIX has calmed down, but the volatility has been in the bonds. Oh yeah, and speaking of bonds, a 10-year yield. Yesterday I said I think we could hold. We made another marginal new low. Want to see what it looks like up here at 310. That still may have been the high. So 310's about halfway, 61.8 back, and then maybe another break. But and when we look at Blake's chart, we'll see if it threatened the wedge on the upside. But anyway, I had a mood ring when I was a kid.
No, it's move.
I know.
Okay.
I don't know why, Blake. Mine was always black.
That's surprising, Dale. Surprising.
What color was yours? Aqua all the time?
Mine was like green or I don't know, blue or
yeah,
something.
figured.
Mood
healthy, balanced, emotional guy. You get green colors in your accounts and on your mood rings. Oh man.
Yeah, mood rings were the cat's meow back then. I mean, that's what we used to have. I mean, everybody had a mood ring.
Yeah, I tried painting over it, but it chipped off. I tried painting over the black.
Oh, jeez. That's pretty sad, actually.
Yeah.
So
what do you think, man? Euro reversal yesterday. Beginning of more corrective action.
Well, I got long the euro yesterday, and hold on really quick. Let me get a screen over here. So, I picked up the euro yesterday when we were down here at, I got it at 117.29. So, picked up a pretty good piece of it long. And what we're doing right now is we're struggling at the 38% retracement. You can see this is just a 38% retracement, and it's going to be really hard pressed to convince people that the euro has reversed, or let me take that back, that there's a more substantial dollar pullback coming, unless the euro could get above like this 118.50, 118.60, which is this downtrend line that comes in there. And the euro is just, it's consolidating. I read, just from like the bank analysis that I read this morning, most people are just saying this is a correction and we're going to look to buy dollar strength on pullbacks. And I think that the dollar pullback could be a little bit more substantial than people believe if we start breaking above this 118.50. So this is right here. Let me grab a pen. Right here. Actually, I don't like that pen color. Let me grab a better color here. It's a little easier to see. There we go. So yeah, I think this like 118.60 level, this is the level that, you know, we get above here, then you're going to see a little bit more of a squeeze towards, you know, 119.50, maybe 120, and you gotta be careful of the 120 level, because that's where the 200-day moving average is. So if you're sitting here looking at the euro dollar, and just so you guys know, the reason why I'm playing counter trend long on the euro dollar here is because of the let me get rid of this, we don't need that for now, is the 38% retracement and breakout point. So this is a 38% retracement of the trend lows to the highs, 38% retracement. It's also the breakout point from 2015. So, you know, I planned on picking it up. We got a nice little, you know, hammer candle on the daily chart.
Yeah.
Developed yesterday. You can see the hammer here. Okay, nice hammer. So that has produced, you know, more of a squeeze. Now I think that it'll get even bigger should we break above 118.50. Then we're going to start to see a much more substantial squeeze, and we have the recipe to continue this squeeze, especially if you take a look at like the cable. The pound had broke below this 134.40. Now think about this. This is here's the cable, right? We cracked that 134.40, right? Broke through it. This held through support like a ton, and now we're seeing a push back up. And if the pound closes back above 135, this could allow for that risk back up towards 137 before a reversal. So which you know, that to me is something that I'm paying attention to, because I think it is it's worth you know, noting, just in case it does start to squeeze, because I think a lot of this shakeout yesterday in the cable really got everybody out of the market. So, you know, I'm hoping we can kind of squeeze up here towards the 200-day moving average, at least in the cable, because I'd like to sell the dollar, or actually let me take that back. I'd like to buy the dollar at better prices. So I really would love to sell the cable at 137. I'd really like to sell the euro dollar at 119.50, 120, if possible.
Yeah.
But, you know, right now it's you know, kind of messy. That, you know, if you look at the dollar yen is actually stalling up here. You can see how it's, you know, stalling at the, I can't get really excited about any dollar yen weakness until we break back below 110. And if you look at yields overnight, by the way, the 10-year yield dropped to 305, which was, remember we talked about this on Friday. This is the big breakout point, is at 305. We came down to 305 and we bounced pretty aggressively in yields right from there. Actually, what I'm going to do is I'm going to set up an alarm. One of the things about TradingView, it's really easy to set alarms. I just set an alarm for 305, and that means if it breaks back below 305, I'm going to get notified that we are breaking down. And if that happens, that to me is going to be a signal that the dollar is probably going to see a little bit more of a severe pullback, is if yields break back below there, and that's going to be mostly the dollar yen. I mean, you know, we break through 305. That means the dollar yen's probably trading closer to 110.50. You can see the dollar yen's actually trading pretty heavy here, which means all the other yen pairs are. Look at the euro yen, come under some pressure. Pound yen under pressure. Aussie yen's come under a little bit of pressure. And by the way, this Aussie dollar, I know it's coming under a little bit of selling pressure right at this moment, but the Aussie dollar doesn't look bad for a move back up towards 96, or excuse me, 76.50, which is going to be really key resistance. But if you think about, you know, the Aussie dollar, you know, if right now the trade war or trade, you know, trade war, I guess you can call it, or, you know, is put on hold, then, you know, is that going to benefit the Aussie? I think it will. And so, you know, the Aussie might be a situation where you can play the Aussie dollar on the long side back up towards you know, 76.40, 76.50 before it rolls back over again. But I think that those are, you know, those are possible trades. And
Blake, we were talking about that, you and I, back inside the triangle, you know, last week, that it was showing, while Euro and cable were pressing lows, Aussie wasn't. Then it made a second low, and kind of talked about it being kind of a weird potential head and shoulders. But yeah, we noticed that last week.
Absolutely. And as the euro and the pound were selling off, the Aussie really was very divergent and holding up, holding up relatively well. But again, it's, you know, think about like the news that prompted this move higher in the Aussie is, you know, we got a situation where at least from what it seems, from the surface, that the tensions between the U.S. and China have abated a little bit, and that's just going to benefit the Aussie, at least near term. I've actually read, you know, a lot of analysis regarding, you know, China's rhetoric and how they're just, you know, they're playing, you know, our administration, and that may be the case. But from an investor standpoint, right now, it's the heat is off, which at least in the near term should help the Aussie recover some of these losses. Because if you think about what the Aussie has done in recent months, I mean, the Aussie's just gotten blasted this entire year, but we've also done a really good job of holding up relatively well. So, you know, the Aussie could perform a little bit better, at least, you know, for the next few days or something. I don't think you know, I'm not looking at the Aussie as like, oh wow, I really want to be long the Aussie for a move back up towards parity. I don't think that that's really the case. But if we can get the Aussie back up towards, you know, 76.50, 77, that might be a better opportunity to be on the short side of the Aussie, you know, moving forward, or being able to buy the dollar at much cheaper prices. That's the way I'm looking at it right now. Now let's take a look at the euro dollar intraday. Let's see what we've got here. And again, the euro dollar, we're at the 38% retracement. Wow, did you guys hear that? Did you hear that, Dale? One of the guys in the office is blowing his nose, and it was extremely loud in my speakers anyway. So the euro dollar is holding the 38% retracement. I think as long as we can hold above this 117.60 level, you know, intraday, you know, you might get some better prices here. You might be able to, you know, pick up a little euro down here and look for a move back up towards this 118.50, 118.60. But this is where the rubber meets the road. I believe that that above this downsloping trend line is where things get a little bit more interesting, where you start to see the dollar pull back a little further. I want to reiterate about the cable, is the cable had made a breakdown yesterday. Okay, it made a breakdown yesterday, but that breakdown might end up being a false breakdown, and that's why I think that the shakeout of the cable yesterday is got to be watched really carefully, especially if the dollar does indeed weaken, and if the dollar really starts to show some signs of weakness, then this cable is at risk of pushing back up towards the 200-day moving average. And then if we break 136, then that's where the squeeze really starts. Again, I'm happy selling the pound at 137. I'm just hoping we get there. You know, and I know I was waiting for that last week and it never transpired. And matter of fact, I might have been waiting for that for the last 2 weeks. So ever since we were up here, I've been waiting for a move back up to the 137 level. It obviously has not come, but I would welcome it with open arms. Aussie dollar still, you know, performing relatively well as long as we can hold above 75.70, which is, you know, about 20 pips away from where we're at. As long as we can hold above that, the risk I think is still to squeeze higher. Here's the Kiwi. The Kiwi broke this downtrend line yesterday, and the Kiwi has been absolutely decimated over the course of the last couple of weeks. I mean, we've gone from just since mid-April, so you're talking a month and a week, we've gone from 74 cents to 68 cents, 68.50. That is a huge move for the Kiwi dollar. That's not something that we normally see. It just an absolute, you know, decimation of the Kiwi. That is at risk now of correcting itself back up towards 70 cents, maybe even a little bit higher, especially if the dollar does show some weakness against other currencies. I wouldn't want to be short. Let's just put it that way. I wouldn't want to be short the Kiwi at this moment. What I'd prefer to do, and if given the opportunity, is I'd like to be short somewhere up here. You know, whether it's, you know, 70.50, 71 cents, you know, 71.50, whatever the price is, I'd rather be short the Kiwi at higher levels, not where we're currently at, maybe closer to 200-day moving average if given the opportunity. The dollar Canadian is very messy. I actually tried to buy the Euro Canadian yesterday and I lost money because I was trying to play the Canadian, the short side of the Canadian dollar, didn't get it, and I got in the trade. I didn't get the Canadian weakness. The dollar Canadian reversed with the dollar weakness all the way around, but actually we're reversed against the Canadian pretty hard. So I honestly don't know what to do with the Canadian currency. I look at the dollar Canadian and I'm just thinking NAFTA, and it's funny, Simon in our chat room, you know, he'd pulled up a comment that I made 8 months ago. Was it 8 months ago? Maybe like 7 months ago, regarding NAFTA negotiations. I mean, this has been ongoing for a long time, and the fact of the matter is that tariffs are going to start to be imposed June 1st if something doesn't get done this month. So that is one of the risks to the Canadian dollar now, is if, you know, if NAFTA doesn't get done over the next week, then the Canadian could really see, you know, come under pressure as some tariffs become imposed on the Canadian economy. So that's something that is at risk. Let me see 1 second. Okay. All right. But anyway, so like I just mentioned, I'm not sure what to do with the Canadian dollar. I'm not. I want to buy the Canadian, as I've mentioned the last few weeks. I want to buy the Canadian currency, meaning short the U.S. dollar Canadian. If a NAFTA agreement gets done, even if there's something announced in principle, then I want to be buying the Canadian dollar. And if NAFTA doesn't get done and tariffs end up being imposed on Canada, then the dollar Canadian may find itself well above 130 and you know surging to new highs of the year. But I right now you can see this triangle's formed in the dollar Canadian. I think it's pretty clear at this point. Let me see if I can grab can I grab the end of that? Oh, there we go. So you can see this nice little triangle that we've got formed, and we happen to be right in the middle of it. I think the reason we go to the upper end or the lower end of this triangle and break out will be more of a function of what happens with the NAFTA negotiations and anything. And trying to figure it out right now is very difficult. It's proven to be very difficult. The Swissy looks like it's a really simple consolidation in a very bullish way, or bull flag pattern. So if I could imagine what the Swissy is going to do over the course of the next couple of weeks, it's going to do something like that. Oops. It's going to do something like that before we break out again. So I think the dollar Swiss is capped by 1.0050, but I'd way rather be a buyer, you know, down here at 98.50 or something like that. And that's what I would, you know, specifically be looking for with the Swissy. I'm not buying the dips as we hit the lower end of this this channel, not yet, but I think that we're going to eventually make our way back, maybe to 99 cents, and then that would give us all an opportunity to be long the dollar Swiss for a potential upside breakout eventually. That's what I'm thinking with that pair. The peso, very similar to the Canadian. I'm not really trading it right now. I think that the 20 levels capping, I think if you get dips down to 1920-ish would be, you know, good levels to be long if that happens. Let me see here really fast. That was just in case we broke out. We might have a Gartley pattern if we broke out to 21, but remember, this is not only NAFTA negotiations are surrounding the U.S. dollar Mexican peso, but also the elections are also you know, affecting the U.S. dollar Mexican peso. So anyway, just a few thoughts on those. The Nordic currencies, I did short the U.S. dollar Swedish krona yesterday, and actually I made a decent money here. I shorted it yesterday through this move down, scalped out of it, made some pretty good money. I haven't stuck with it anymore, but you can see this this U.S. dollar Swedish krona. It has been, if you guys recall, Steve and my conversation just as I was handing him over the webinar yesterday at this period in time, we both were talking about the outperformance of the Swedish krona versus the euro, and the Swedish krona continues to outperform here. So, but what's going to be really important at this point is going to be this support right here, about 850, say roughly about 857, because if we break through this this uptrend line, that's probably going to put some some serious downside pressure on the Swedish krona. So anyway, Dale, you there?
Yes, buddy.
So we don't have Steve and Stelios today because they are headed to Cyprus.
I think Andre's going to be with us.
Andre is going to join us here in a second, so which is great because it's going to give you guys a good view of the harmonic patterns that are developing. What I was seeing if there's any news that's coming out. We have actually Canadian wholesale sales that are coming up. And Andre says he is here, but I think you probably have to get him from the attendee list, I would assume.
All right. I'll do that, and good luck today, Blake.
Oh no, I'm gonna stick around. I'm gonna be here while Andre's speaking too. I don't want to just abandon you guys because I know Steve and Stelios are gone. So I'm gonna hang out with you guys the next couple of days as well. But I'm interested to hear some of Andre's views here in a little bit while you bring him over. But are you? Oh, you're giving it to Andre. All right.
Oh, I gave him green. Did you still have some more?
Hey, there he is.
Hi, everyone. Good morning.
Good morning, Andre.
So you have Aussie Kiwi on the radar here, buddy.
Yes.
Why don't you tell us what you're seeing?
No, just because Dale Blake mentioned it, so I just pushed that chart because I shared this amazing chart pattern bounced from the 161.8 I shared that chart on ForexAnalytix, as we can see here. This was a setup. Yeah, this was a setup. This is what I call an harmonic inside the structure, and bouncing at a support level. So I was waiting for that setup to engage, and we are now trading above the default.
I think that's the
default
first time I've seen two harmonic patterns within a basic technical pattern like that. Very interesting take, Andre.
Yeah, I like to search for those specific conditions. Sometimes we will trigger in the right direction, and sometimes the market will not follow that direction. But we understand that when we search for a specific edge, and in this particular strategy, when we search for advanced patterns or harmonic patterns, we try to identify those specific situations or specific conditions inside the market. And we can see here, I know you use RSI, Dale. You are an expert making analysis supported by RSI. I also like to use MACD in order to get one more confirmation related to divergence, and as we can see here, we have also MACD following those conditions. So offering.
Okay. So that was a great call, Andre.
Yeah.
We're in this industry where what have you done for me lately? So someone is long from caught the bottom. Do you have any upside objectives? How would you manage the trade from here if long?
From that same chart?
From where we are now in Aussie Kiwi.
Aussie Kiwi. No,
That's
I have in terms of position management, and for me that's crucial. I have two default targets for the pattern. So I have my default Fibonacci levels. I use the 38 and the 6U18 by default for my position management. So
you're close to coming out your second half. You get out.
Second target. Yeah.
Okay. You get out of your first half at 38 or 50. 38%
retracement. I break even my position. I always like to identify the previous structure because obviously this is a daily time frame, and eventually people need to make small adjustments. So I like to adjust my stop loss a few points above my entry at first target, and then I like to trail my position with a dynamic stop at second target. So let's assume
we're a stone's throw away from you being out of this trade on the long side.
As soon as the market offers me a condition to short it, I need to, let's say I'm searching for an opportunity to sell these markets. So where the market may print that opportunity to me. So I will search for bearish divergence at previous structure.
Oh, okay. So you won't take your longs off at your 61.8. You won't get out your longs until you see a reason to short it.
I keep partitioning my position at second target. I activate a dynamic trailing stop. If the market decides to go above, my trailing stop will follow automatically. But if the market reverses from the second target, obviously I need to deliver back some points for the market, or I need to close the position manually if I see something in that direction. So let's imagine the price will reach my second target, and let's imagine we have we have a new high, and we have the market printing divergence at 61.8. If the market, so it's the same. If I'm searching for an opportunity to sell these markets, what I will search for? I will search for bearish divergence at strong levels of previous structure. If synced with those fib levels, even better. So let's imagine a 61.8 pullback and bearish divergence at previous structure, resistance support zone. So it can offer, it can indicate us at least, let's say, an opportunity to engage the market in the bearish direction, and that will trigger me to get out this market, obviously.
Okay.
But usually I like to how can I explain this? I like to set my trades and not to forget them. You know, I don't forget my trades, but I like to engage them and respect structure and position management, and I don't think too much in those trades. So I like to achieve targets and keep comfortable trading and waiting for those setups and position management also.
Okay. So what else?
This is Aussie versus Kiwi because Blake has mentioned it, and it's curious because we have that pattern there. A similar one is the one that we are seeing here on euro versus dollar. So we are trading now a 224 extension, and the market has completed the shark pattern. It's also a pattern that I shared here previously, this one. So this is when the market printed those. This is a double top. At that moment, we have a double bottom on dollar index, so at this point, I just need to wait for two things can happen here. So one of them is to break the previous most recent support, or to break the double bottom, the double top. So I'm not interested to remain inside this market above. We have here also another bearish. I can show you this in a live chart. We have here another bearish harmonic. Let me try to.
So you have this shark pattern completing. Before you pulled up this, the old chart was about 1780. And that was it. It's 224 was 1780. Took it out by 50 pips.
Yeah.
Close enough for government work. Yeah.
Yeah, and the advantage of being inside of the ForexAnalytix community is because not just because of Blake analysis. Obviously, we have one entire amazing team working. But when I search for those completion points, and if I see Blake sending or sharing a bullish candlestick formation on a daily chart, it's a tremendous, and it's a very, very strong signal for the pattern to work. I'm not sure if the pattern will work or not. There are very interesting conditions here. We have the market offering bullish divergence, and well, it can happen. It can go and search for the 200 media average above. It's pointing a few points below the 38% retracement, the first target by default, for at least for me, my first target by default is 38% retracement. We have the default target actually by manuals is the 50% retracement for the shark pattern specifically. I like to trade them based and supported on the first few level, but usually the price will search for the 50% retracement by manuals. So, and usually that 50% retracement needs to be synced, and it's synced with previous structure support or resistance zones. That will depend. But I like to, before my engagements, I like to identify targets, and I like to look left. And there's a very interesting quote that I believe a lot of people already know, that look left because structure leaves clues. So, and actually I like to get some confluence between targets and previous structure. And if the pattern somehow it's perfect, and if somehow the market is offering me also other conditions as bullish divergence on RSI, it's also a confirmation point. And then, as I was saying, Blake shared yesterday this bullish hammer candle on a daily, which has forced already the price to move from that support, from this 224 extension. Obviously, as Blake was mentioning, we need to violate the bearish descending structure in order to validate or to increase the probabilities to the market to go higher. But well, those patterns, why I like to trade those harmonics, first of all, because it allows me to identify targets, and it allows me to set and to apply a risk strategy to trade based on my first target by default. So let's say this is my first target, and using a maximum of which I do not suggest, but using a maximum of 1-to-1 risk reward situation, we have at first target, so a 38% retracement, and this is what I consider my maximum risk for this trade. So 38% retracement my first target, and the 1-to-1 risk reward maximum is the maximum that I'm allowed to trade. And obviously, position sizing ends up being the most important thing when trading on different time frames. So if I go into a lower time frame chart, I need to adjust my position sizing in order to not cross my limits in terms of risk. But
so smaller position size, the longer term the chart is.
Yeah.
Okay, buddy.
Small, and trying to find some balance between a lower time frame and a higher time frame and those specific patterns in targets. It's a process that requires time, obviously, but I believe routine and persistence makes the process.
You're married, right, Andre?
I'm sorry?
You're married? You're a married man, right?
Yeah.
Because I keep hearing about all these engagements you have here. So I was just curious, you know, you're keeping the, if you get engaged as much as you do in the market, you'd keep the bears very happy buying all their diamonds. So, all right, just kidding around with you.
No problem at all. There are some expressions that I like to use because, as you know, Blake, I'm Portuguese, and sometimes I have some difficulties trying to find the best approach or the best expression possible for you to understand, because I know that sometimes people.
I have an audience request, but you want they're asking if you have any patterns developing in gold.
Gold, not specifically, not actually. I'm out
No's a valid answer.
No, it's a valid answer, but not for a day trader. I don't have a specific trade. I'm looking into gold, into trying to hold above this structure here. I'm not so sure if they will hold or not, but I'm waiting. I have nothing clear in relationship with metals unless we see the market in a higher time frame.
Okay.
And actually, we have my approach also on inside our blog. We have our blog page. I'm trying to get there very fast to show to our community, so you can go into our blog, and there's a metal. The previous post a few weeks ago, there's a post inside the ForexAnalytix that you can it's a free blog, and there are some macro and basic and harmonic perspectives also for all those metals. But I look to metals. I look into metals into a higher time frame. Actually, I like to buy. I like to try, at this moment, I like to try to search for opportunities to buy silver. I don't trade gold specifically. I like to get involved with silver specifically.
Why is that? You get more reliable harmonics in silver?
No.
Or because you just like the silver structure better?
No, because I believe silver in terms of it's more beneficial for the technology. You know, gold
Okay.
is not so.
So you like the fundamental case for it?
Yeah, I like the fundamental behind silver instead of gold. So I believe gold will lose value for silver. Eventually, we'll trade silver on better prices, at least for me, and it's cheaper than gold to trade. So at least for me, it's cheaper to trade silver than gold. I have better prices also trade it. So that's my approach. But
so do you have anything in silver then that you could show?
No, I share at this moment. I share the same vision for both. I'm waiting and sitting above my hands at this moment with metals. I have no harmonic pattern at this moment.
Well, you have bearish,
and the market is very choppy at this moment. So,
but you had bearish harmonics, Andre. So
no, I have bullish harmonics.
Oh, on the gold.
Those are bullish harmonics on gold that I need to wait for them to get completed. Those are levels for completion point. So I need this blue one to reach the 88%.
1240.
1251. No, 1251.24 exactly, and then below that level at 160.18, 1155 on 1156.
That's where I think we're going.
Yeah, retest the previous structure bottom, the most recent supports eventually, the fractal, at least a fractal. No, I do believe it can happen. Let me just try to push.
I've changed my mind recently. Maybe it's good now.
No, it's I'm constantly changing my mind because I trade harmonics and they are hybrid. No, sometimes we are expecting the formation point of one specific harmonic and the market ends up building another pattern. Let me just measure this fast retracement here. I'm trying to push my retracement tool here. Let's just measure this retracement there, and let's try to identify some confluence here at 161. So we have something between the 78% retracement and the 88% retracement, the 161. So the level that you are waiting for, 1156. So let's say something between the 78 and the 88% retracement, a retest to the previous structure support, the most recent one. I will not be surprised, but it's a weekly time frame chart. It will take time to achieve those levels. And first of all, we have structure, we have 200 meter average, we have the 61.8 retracement, previous support zone. So it will take some time to achieve those levels, but we never know. It's gold, something like a movement similar as the previous one can print something like this. No?
Gold finger.
Yeah. Actually, it will nail the 88. And let me just show you why.
You're at cable. You're at cable before I interrupted you.
Yes, I want to share my view on those dollar charts very fast, because somehow all of those are trading at reversal fib level and the completion point for one harmonic. So this is the daily time frame chart for euro dollar, as I mentioned before, above the 224 extension, previous structure support, by default a 50% retracement. Cable, it's trading at 38% retracement, as Blake has mentioned. I shared this chart among the community and also on Twitter and other socials. This is a cipher pattern printed at 78% retracement. I was expecting, as soon as the market creates this new top here or these new highs, I was expecting a retest to the previous structure resistance, as the market has done here, and then a new high. And at this point I started to try to identify the reversal point at those levels. So 200 meter average, 78% retracement, the bearish cipher pattern, and we are now above the first target. So the market has synced something like, let's measure this movement, 900 points or 979 points here, and with default targets positioned at 945 points, a 38% retracement, weekly time frame chart, and we are now trading above another bullish and eventual bullish pattern. and it's this internal one. I need to measure this one again. It's an extension from this extension, please. It's an extension from the most recent wave that prints the new high at 224 extension. Yeah, 224. It can be printed between the 161.8 and the 224. Let me just put that in another color, and let me clear this green. But this is a bullish sharp pattern. It can be printed at 161.8 at this point below the 200 BD average, and we are now extended at 224 extension. So at this point, above the 38% retracement from the weekly time frame chart, I have a confluence between this bullish sharp pattern at 38% retracement. So expectations to see a pullback or a small relief, at least a relief at fib levels. By default, the 50% retracement from all these bearish momentum. So I expect to see the price searching for the 200 media average, eventually to act as a resistance, the next resistance. Again, as Blake has mentioned, we need to violate this previous ascending structure, this sweats information. So we have cable with a bullish harmonic. We have euro versus dollar also. We have Aussie also trading, and actually one of my trades recently engaged 38% retracement as the first target, engaged at 113 extension. This is my second attempt to engage the markets in a bullish direction. My first attempt was at 88% retracement from all this swing here. So I was expecting this bad pattern. Actually, it's not this fib, I'm sorry. This is incorrect. So the first opportunity that I'm out of that market, obviously. The first opportunity was engaged at 88% retracement, and then the market extended to the 113 extension, completing the alternate bad pattern. And then later I engaged the market with this edge and shoulder, reversal edge and shoulder formation. I'm not sure if it's the same that Blake has mentioned before, but I was expecting this, the pullback into the 61.8 retracement here. So at this point, the golden ratio fib level, and when I was looking into this chart, I see something like a left shoulder, a net formation, the neck, and at this point I was waiting for the trade at 61.8 to print the right shoulder and to engage. So usually I like to forecast something like a symmetrical ABCD pattern to identify targets.
So right now we have a quality, or we have more than a quality?
We have a perfect, almost perfect, actually let's say a perfect symmetrical pattern below the 200 media average as the most recent, as resistance, and we are trading at, let me try to increase this time frame again. I need to identify targets. We are a few points below the first target.
76.5?
No, let me, 38% retracement first. First things first, Mr. Dale, no?
Okay.
38% retracement, previous structure support. This is my first target. And at this point, we adjust our entries, so our stops at least to break even or a few points above. I like to identify the patterns. Usually, this is a neck zone, so usually the market will retest that neck again later. Sooner or later, I need the markets to retest that neck. So be careful with one eventual push into the 38, retest the neck and the new high eventually, or I don't like to forecast those movements, but at this point there are two options. One of them, retest the previous structure, retest the highs and trade above, or retest the highs and down again. And during that process, eventually the market will offer me another harmonic pattern to try to get involved with the market. So this is the third versus dollar instrument trading at potential reversal. And to finish, to allow you to, I'm not sure if you have an interview today, I believe so. And this is Kiwi, also another one trading at 88% retracement. This is also my second attempt to engage this market, because my first one, it was this bullish bat pattern at 88% retracement, because I was seeing this market something like this. This is the bearish momentum, the bearish structure from before. We have a consolidation period below and the breakout of that structure. And from here, I was expecting, okay, this is my impulse. And let's try to, if the market needs to correct, I need a retracement from this level to the previous and most recent highs, and the 88% retracement from that level is here to print this eventual bullish bat pattern. The market has failed, and it has printed a major bullish but considering all these bullish momentum, which makes sense. So at some point, so I missed this trade here, and I'm now inside this position here. So, and this is my fourth instrument versus dollar, offering an harmonic pattern to trade. Actually, I'm not sure if this is, no, I shorted among the community dollar versus yen, but we have also Swissy trading at 300% extension, and this is my very limit for the completion point for a bearish shark pattern, and it's something like the previous swings extended at 300% extension. So at this point, again, 38% retracement is my first target. By manuals, by default, the price should search for the 50% retracement. So I have one first, let's say one first target in my action zone at 38% retracement, 0.9525.
Is a 300% extension pretty extreme? Is it pretty extreme?
It's the ultimate or the extreme level for the shark pattern. I like to, we search for the shark pattern at 224 extension. Right. Okay, but and not more, not only that, Dale, but actually previous structure highs. Okay. Okay. And if I have a specific Fibonacci level, extended level, in this case, synced with the previous close price or the previous higher highs, I need to take that in consideration. So it's sometimes it represents human behavior, as most of the times we trade human behavior. So we wait for a specific human behavior, and we take the trade based on those behaviors. No, and this is my limits or my extreme level for the completion point for the shark pattern. It's not usual to see. Or not common to see those sharks, at least on my profiles, because I don't search for those extreme levels. But somehow, sometimes we have the feeling also, not only the technical and not only the basic or the advanced pattern formations. We have sometimes we have our own emotional intuition. Yeah. Exactly, at least in my expression, and thank you very much.
Well, intuitively, I'm thinking you covered everything you wanted to today.
Yeah, that's correct. Just to finish with this cat, because Dale also mentioned, and we are trading. It's interesting because I have only bullish patterns here. So, but for those to get completed, I need to see the market to sink. So let's say at this moment I'm bearish with CAD, waiting for one first level for the completion point at 161.8, extension 126.84 is my first level. The second level will be the 224 extension here. It will be the previous structure bottoms, obviously, at 125.63, and below this previous structure support, I will start to, okay, eventually the market will print me this bearish descending channel or red information, and it will search for lower price eventually. And if so, the next eventual harmonic pattern at 127 extension, the Gartley pattern at 123.65. So, and actually there's a range between the 88% retracement and the 127 extension, previous structure support also, and one eventual descending structure trend line. This is a parallel channel from these two tops. So this is just nothing more than a copy paste from, because it's what I have, at least for now. It's just a copy paste from this descending trend line and position it below. Obviously, we need to wait to validate not only the harmonics, but the structure also, and just to let that approach. Dale, all yours. I'm not sure if we have Greg here. We have interview.
Thank you very much for bringing your great work to the table.
Thank you. Thank
Have
you.
a great day. Good hunting.
You too. You too.
Thanks.
And for just to finish, Dale, just for those who are our subscribers inside the ForexAnalytix, I will start to update some charts today until the end of this week. So stay tuned for the next patterns. Okay.
Okay.
Thank you very much, Dale.
Thank you, Andre.
Thank you. Thank you.
Okay, Graham, I'm going to make you the presenter. Looking forward to meeting you, hearing your voice. How are you today, my trading warrior brother?
I'm very good, Dale. How are you?
Right. You must be burning the midnight oil over there, huh, buddy?
Oh, not
What
a problem.
time is it?
It's 1 o'clock in the morning my time, but that's no problem.
All right. Well, Graham, so great to meet you. I found you on Twitter, and I'm always interested in the beginning of people's journey, how they got involved in the industry. Can you tell us how it happened to you? Did you have a mentor, or what was the catalyst?
Well, I worked as a civil engineer for about 30 years and built up quite a bit of equity during that time. And a group of us sold one of our companies to an American company. It was a New Zealand-based company, but we were bonded for a period of 3 years to the American company because the value in the company was all about the people. And during that 3-year period, what happened was a little bit extraordinary. Our internal share growth was 25% a year, but the time between selling the company and when I cashed up, the New Zealand dollar changed and almost doubled. And so I made gains both in share value and in foreign exchange value. And I thought, well, none of that was due to me. I'd like to learn a bit more about this.
Yeah. Okay. So you saw what a major effect exchange rates could have on total return. And
absolutely.
So,
if you can get gains in both directions. So I worked abroad, managing large energy projects, developing hydropower projects for many years. And that's largely about risk management. If you don't get your risk evaluated and managed, then you're in big trouble. And these projects were of a size where you would have serious trouble if they went wrong.
Yeah,
and so
not just loss of money, loss of life.
Absolutely, and unfortunately, Dale, that certainly did happen on some projects. Not that I was associated with that, but I certainly witnessed that, and that's a tragedy. But one of the things that you learn when you're managing companies like that is that if you don't really fully understand your risks, then your company's exposed. And as you say, safety's obviously one of those big risks. And you had to have a very strong discipline to try and create an environment where all of those risks were identified, and then you could create a plan to deal with them all. And so those two sort of things, the discipline and the risk management, sort of gave me a little bit of a foundation because I sat on the beach for a little while after I finished working overseas. I brought my kids back to New Zealand for high school, and I thought, what am I going to do next? And I thought, well, I've had a strong interest in markets. I really want to learn how to trade. And so I knew nothing. I'd been investing, obviously, but relying on financial advisors to guide me.
Right.
And,
You mean sales?
Sorry?
You mean salesman?
Yes, and certainly what I discovered now that now that I know what I know is that they knew less than me.
Yeah, they knew what all the loads were on the products, all the commissions.
Well, that's exactly it. I mean, basically they were selling my equity into funds that gave them the biggest fee.
Yes, let me convert my client's equity into commission income. Okay, so you went that way. You gravitated towards these. You want to talk about median lines today. Did you start off, I'm just guessing, with maybe Andrew's pitchforks?
Yes, well, I actually started with a number of different traders I was quite determined to learn about trading, so I worked alongside a number of professional traders, a lot of names you'll know, and I finally found my feet with median lines, and I've got a short presentation to show you what I mean about median lines, because a lot of you may not be familiar with them.
Yeah, beautiful.
So when you're ready, I'm more than happy just to perhaps go through that. And
okay. You now have control of our television set, Graham.
Okay.
All right, so go ahead.
Okay, so
all right. Okay.
This is just a little bit of education about median lines. So we're just going to go back to school for a couple of minutes, if you don't mind. Now, median lines have been around since the early 1900s, and they were used to evaluate markets back then by people like Roger Babson. And,
oh my God! Let me just. I'm sorry to interrupt your lecture, but you know, you're the first guy, and I didn't know that he was behind it. But I remember being told, like in the 30s, that the first 3% move to the downside, according to Babson, was the beginning of a bear market. Okay. And they called it the Babson break.
Yes.
Right? And so, you know, I'm fascinated that his name came up. So go ahead, buddy. I just had to tell you the only thing I knew, which is pretty famous. You know, when we were down in February, we had some 3% down days. I think Roger would have called it a Babson break.
Well, I believe he was commissioned by President Roosevelt to do some forecasting way back then, and the forecast that he produced using median lines predicted many things over a 15-year period, even in spite of the World War occurring. So he has got quite a reputation. But the median lines really define a path where price sort of oscillates around. And to put a median line on a piece of chart, it's a matter of just using 3 significant pivots. And it's easier to explain when you start seeing the pitchforks. But what you see when you get this median line in the right place is you'll see price action and reaction to it. And that information is very valuable. So you've got trend and you've got action and reaction, which is either support or resistance. And what happened as the idea evolved is Dr. Alan Andrews developed the work on the earlier median lines, and he befriended Roger Babson, and they worked together for a little period of time. And what Andrews did is develop the Andrews pitchfork, which many of you are probably familiar with on your charting platforms.
Right.
And he essentially took the median line and put upper and lower parallels on it. Okay, so it's really as simple as that. And instead of just looking at action and reaction to the median line, he started looking at action and reaction to the outer parallels as well. And you can see that this can build up quite a powerful picture. This is treasury bonds from 1981, and there's a blue median line on here drawn on 2 pivots. And that median line, as you can see by the green highlighted areas, has defined the middle of that price action ever since that time. And so you can see where to anticipate resistance and support and trend and changes in behavior. I'll go over the bonds a little bit later. And just here's a little bit of terminology, and I won't dwell on this because people can always play the recording back and look at it, but it just explains some of the terminology that I use around the pitchfork. And this is a normal pitchfork in the down direction, and it's on cocoa futures. And you can see that the validation that's been building around this upper parallel helps to get this pitchfork some credibility. That's your resistance there, and it's defining it extremely well. It's not a trend line, it's not a channel, it's actually a median line off this pivot. And there are 2 other types of median lines, and they are very, very similar. The only difference is that the origin on a modified shift is shifted vertically and horizontally by 50%. And the reason that that's done is often you'll find price behavior flattening off, and so a normal pitchfork won't do it. This is coffee futures, and with this modified shift, it actually caught this top right here, virtually within pips. And I think the futures actually declined quite considerably after that. And the last type is this one here, which is a shift pitchfork, and this is on copper. And the difference here is that the origin is purely shifted vertically by 50%. And so those are the 3 types of median lines that I use. And what you try and do is just select the one that gives you the best action and reaction, the best fit to the price that's unfolding.
Very nice work.
And this is again cocoa futures, but this essentially enables you to do continuous trading. I do a lot of position trading and swing trading. And so if I can see validation building along a median line like this, as it did in cocoa, I'll just hold a position. And what I'm then looking for is I use internal pivots with these little dashed red lines, which are called sliding parallels or SHs. And you can see that you get action and reaction to those. And if you know where to sort of expect where resistance will be in a downtrend, then you know exactly where to put your stop loss. And so you can protect your position very, very quickly. And down towards the bottom of this chart, what's happening is there's a bit of a change in price behavior going on. So price is not making those lows, it's not hitting this line anymore. In fact, it's actually stepping up, and that's what we call a change in price behavior, and that's time to get out of that trade.
Okay. What would that would tell you get out of your shorts? What would tell you to start considering longs on this picture? Essentially,
what I'd be looking for is building support in a credible way. So there's actually support here. The next thing would be a break above this median line. And I've got some examples shortly, Dale, which will show you how that works.
Okay, buddy.
So we've almost finished the educational slot, so hopefully I'm not sounding like a school teacher, but no, these methods are over 100 years old, and here it is working perfectly on Bitcoin. And this is the chart is a bit scrappy. This is from a trade plan from about 18 months ago, I think. But here, a single median line is showing me where to expect support. So you can see support here. You can see price stepped up and then came back down onto the median line, support there. It stepped up again, hit resistance at these outer warning lines, came back down and hit the upper parallel. So you can see where to sort of expect support. And a lot of traders, even what I've been just listening to in the last hour, look at support horizontally using Fibonacci. Nothing wrong with that at all. What I do is look at support and resistance along the trend of the median line. And it's quite astounding what you'll see often. So the terminology is explained there. I won't dwell on that. And I just wanted to show you one of the key things, one of the key reasons why I got so interested in median lines. So the education part's over. We'll start looking at some real charts now. Okay. And certainly if you have any questions, Dale, just scream it and I'll stop.
Okay.
But this is a typical application of median lines on a stock that we all know, GE, and this is a weekly chart, and the blue median lines were showing a nice uptrend, but the price behavior started to change. The sliding parallel up here, price failed to reach it. There's a little gap there. It went down, then price came back up and retraced, and it failed to reach that upper level. It actually only reached the lower level. And for those who use Fibonacci, that actually also corresponded with a 786 retracement. So you're getting two pieces of information that are giving you a pretty valuable trade setup there.
Confluence.
And that's really quite an obvious, or to me now anyway, an obvious change in behavior on a weekly basis. So what I then did is looked at the weekly to daily chart. Now this is the daily, and this is where the top was in the weekly back in July 2016. And I waited for the retracement. Here's the 786, and I put a new median line on it. And I waited until I got validation of the sliding parallel. You can see the price was finding resistance right along this little line here. And so I made an entry with a stop loss just above the outer parallel. And you can see that the risk margin is very, very low here. And within several days, that was break even, or the stop loss was moved to break even. So essentially what you're doing, this can be worked on any time frame, but this is an example of a position trade where what you're looking for is just continuation of the downtrend and any changes in behavior. And what you see along the way are some patterns that help to confirm that behavior. You know, here for instance, you recognize a rectangle pattern, classical chart pattern. And so there's another entry point there. Now I try not to enter classical chart patterns when they break out. I'd rather enter on the other side of them, to be honest, because that's where the risk is lowest. And so what I'm looking for here is just more and more validation to the median line. And all of a sudden you start seeing it occur here where you get reaction to the sliding parallel, you get price moving down, finds support along the median line, tries bouncing up, it can't make it, and then falls down again and finally breaks down through the median line. And this is really a great sign of acceleration, which is often associated with an impulse wave. If a few of you will be familiar with the Elliott wave terminology. But when you start seeing price dropping down through the median line like this is getting stronger. This is acceleration. And so there are other places where you can pyramid the position with very, very low risk. Now, I got stopped out of this trade just recently, and but I'm not worried about that because I've traded what I believe is one of the strongest moves within this chart at the moment. And if it goes up to this line here and then keeps going down, I don't really care. I'm quite happy with the trade that's occurred here. The reason I got out is there was a little change in behavior where price started finding support at higher levels, and you can see that this sliding parallel was where I'd had my stop losses set, and prices were tracing higher. So this could be a wave 1, 2, 3, and now we're in 4. And I'd rather not trade corrections or sit through the drawdown of corrections if I could avoid it. So that's how I use.
Even Elliottians don't like to really trade fives. They let fives happen without them.
That's right. I mean, it depends on the trade too. I mean, sometimes it's worth holding on, but in this case, I just decided not to. But the key thing here is my focus is purely on risk. So the median line is giving me a roadmap for price. It's giving me a trend. It's giving me resistance, and it's showing me changes in price behavior. And you'll notice that there's no indicator on the chart. I'm purely focused on price, and that's what I like to do. But I also
I hope your shades are drawn if you're trading, since you trade naked.
Sorry, what was that, Dale?
I hope your shades are drawn since you trade naked.
Right. I generally got.
But I'll tell you something, Graham. What a grand slam presentation of median lines. Way over my expectations, and really, it's just geometry, isn't it? All markets are geometry, isn't it?
That's the key thing. I think the reason that these things work the way they do is because of the fractal nature of the way price unfolds. And those of you who use, Fibonacci's will understand this exactly.
Right.
So you put a median line on your Fibonacci pivots, and you'll start seeing something quite magic. And it just really does provide a roadmap. It's not perfect, but no method is, and at least it tells you early when you're wrong, and that's the key thing.
I'll tell you what, it's worth learning. I would, I would need to learn this to add it to, you can't teach an old dog new tricks, but I think that's definitely worth learning. And you've given one of the best presentations on, tying in median lines with pitchforks and all the really intricate work with a simple concept. I'm very impressed.
Well, I think the thing that I learned, Dale, I've studied, virtually every method you could describe, including Gartley, including Elliott wave. And to be honest, what happened in 2011, the city that I live, it had very devastating earthquakes.
Oh yeah. Yeah.
Over a period of about 2 years, and I actually started losing money. And I thought, gee, I can't trade. I mean, my desk was literally shaking every hour, and the sleep deprivation, you can't trade under those stressful environments. So
no, you can't.
I thought
what is that? There's a church in the name of the area in New Zealand, right?
Yes, there's a cathedral, and it's still in ruins. I mean, the city was.
What's the name of the city?
It's Christchurch in New Zealand.
Okay.
Yes.
Okay.
So
yes, I'm in California, so I understand.
It's well, you're not far from a pretty big fault line there too.
Yeah, big one. So you have a couple business models I noticed on your website where you have a subscription and you also mentor.
Yes.
So,
what I try and do is I'm trying to build a community that are really interested in learning about median lines and how powerful they are. And so I publish weekly reports and intra-week reports on different markets. And I was about to show you something on the US indices. And I also just have some on-demand courses. But the key thing is these median lines are quite simple. And quite often, one of the techniques that Dr. Andrews used was to use 3 pivots, P0, P1, P2, to find P3. And then when P3 formed, you'd wait for P4, and then put the median line on P3 and P4 to find P5. And so the Ellioticians amongst you will already recognize what this means in terms of the Elliott wave principle for an impulse wave. And this is a very simple way of monitoring trends. So effective that here's one for emerging markets where you can see support and resistance between 2 lines. Now, if you know where that is, even if you're a day trader, you can actually day trade using this chart, using the support and resistance levels. Mm-hmm. And the thing that I'm really interested in at the moment is where we are in the US indices. And I know a lot of people are interested in that. And so what I've done is applied median line analytics to that. And to help with understand that, I've just looked at a number of historical events. This is in the 1920s, where you can see a very nice single median line that's defined the trend and support all the way up to the top. What I also do, when I do use an indicator, I use RSI, and I know you do as well, Dale. I use it so differently from anyone else I've ever met. I developed these methods myself during those 2 years where we had the earthquakes. Because I couldn't trade, I did a lot of testing and developed systems. And so the momentum signature is just as important to me as price is now. And I just use median lines on that to monitor what's going on. And obviously in trends, you'll see divergences, and a lot of people get really confused about divergences and think, what does that really mean? Well, I've learned to understand what that really means. And what I'm looking at now in the S&P 500, for instance, is this example where we just followed the Dr. Andrews guidelines and put the median line on P1 and P2. And you can see that the trend has been well defined all the way up to this top. And you can see that the sliding parallel through here is to find resistance all the way through. It's like, you know, if you just saw the blank chart and didn't have these lines on it, you'd see a lot of different things, but the lines help to sort of train your eye onto patterns and trends. But up the top here, you can see that price behavior has failed to reach the sliding parallel, and that's a really distinct sign of change of behavior. And obviously the market started rolling over and corrected.
Right,
and
remember that.
All I've done then is just used a median line to monitor the correction. So I can use them on corrections as well as trends. This, I believe, was either a zigzag or a flatter, but yeah, it's essentially that's picked it up pretty well. So now we can apply a median line on P3 and P4 and try and find P5. What I've noticed is something a bit odd, and I'm sure you can relate to this, Dale, from your own use of RSI. What we've got here at this last high in the S&P 500 is no divergence. We've got the maximum reading of RSI, and from my back testing, I can't find any examples where that's occurred at major tops. Now
that's
I may be wrong.
My theory on RSI, that confirmed highs with RSI with price are rarely the high. Maybe a high, but not the high.
That's what I believe in too, Dale. So what I'm looking for is further upside, and the thing that I want to focus on now is I believe that there's a potential for this fifth swing to extend, and it already has. It's actually extended quite a long way beyond where you would normally expect a fifth swing to extend. If the labeling's correct, we're pretty close to a 786 extension here. And I think the Nasdaq's even higher. Yeah. But when I looked at an example back in the Dow Jones in the 1930s, here's the median line on P3 and P4, and the extension at the 786 level, which is where we currently are, produced the highest momentum right here.
Right.
And so what I'm expecting is further upside, and I may be wrong, but I know where I'm going to be wrong. And what I'm looking for is a divergence at a top, at a significant top. Okay. Now that doesn't mean to say that we're not going to get a correction, obviously, in the meantime. But you know, the median line seems to be working pretty well. I don't think we've often seen markets extending this much in a fifth wave. It can happen, but this wave count must be right because it's Bob Proctor's and he's always right.
Oh, yes. Well, really interesting look at that, and interesting confirmation that you did all that back testing. I was just assuming. I have seen exceptions. You know, there's an exception to everything where you have confirmed highs and lows and they end up being the high and low, but it's definitely not the rule, more the exception. Yep. So what a great presentation, Graham.
Well, I hope I haven't put anyone to sleep, but the other thing that median lines can do, Dale, is that with channels, you often need more points before you can use channels or trend lines, whereas with the median line, you can actually do it with the first three pivots. And the other thing to look out for is things like this here, where you get a false break. That's in an uptrend, potentially very bullish, and in this case it was.
Right.
And often when you also get a break, when you finally get a top in, the retracement often actually kisses or retests the underside. And you often see that in channels as well, I believe.
Someone in the community is asking what your hit rate is if you track it. You know,
my hit rate.
You know, are you right half the time? Are you right if you track it 60% of the time? That's the hit rate.
I don't have the statistics, but what I do know is I know now when to look for changes in price behavior which say I'm wrong, and I can show you a couple of examples. So if price is not doing what you think it should be doing, then something's wrong, and that's the way to look at it.
Okay. All right. Well, go ahead.
The other thing that is interesting is looking at the the other US indices like the Russell, which has made new highs recently.
Yeah.
And that's something that the S&P 500 and the Dow haven't done.
Right.
The thing I've also noticed is the S&P 600 has made new highs, and so have the FTSE and the FTSE 250.
So it's a message that broader markets, the underpinnings of the market, advanced decline lines are, this is positive for the rest of the market?
I'm getting the impression there's further upside, but I can see the potential for some of these indices to be caught in corrections. And you know, one of them,
like the Russell here.
Yes, this Russell has made new highs,
yeah,
and it may be off to the moon. But I can also see that I can see what I would call a double zigzag potentially there, where I've got a blue median line and we're virtually at the upper parallel.
right.
Now, if we zoom up through this and keep going higher, then this is clearly potentially not corrective. But
All right, I have a question to ask you with this example. So I know we're at resistance here, but aren't you always better off shorting the weakness than shorting the strength? And Russell is a strength, and you're talking about the S&P and the Dow not making new highs that are still in potential failing rallies. I know it's always more attractive to, you know, short the thing that's the strongest, but isn't it more of a higher probability outcome if you short the weakness that is being carried up by something like the Russell, so that when the Russell pulls back, the weakness accelerates?
Well, it's an interesting point. It depends whether you're a trend trader or a counter trend trader, Dale. My rules that I use for median lines is that I must trade in the direction of the dominant median lines, and the weekly, the daily, the 240 minute are all pointing up, okay. So I can't short it. That's just my rule. That's my rule. But your point is, well, your point is good too, because you know, there will be a point where you might actually get a top that occurs here at equal swings, which is very common, or at this line, and that could be an excellent low-risk shorting opportunity. But what I generally do is let the first leg come down first and put a new median line on that and trade it that way.
Yeah, wait for confirmation.
Wait for confirmation, yes.
Got it. So there you are, median line analytics. You want to show us the treasuries too?
Just a couple of quick charts, and oops, sorry, I'm jumping around a bit there. I won't dwell on that. That's the monthly, but there's something pretty big potentially about to happen here. If we drop below this level, this lower parallel here, which is this is bonds, futures, and if we drop below, say 137.50, that's starting to get to be a change in behavior on a monthly basis in my system.
Yeah. And
I've been tracking this on daily. And so far, you know, the trend has been down nicely. It's been a beautiful trade, actually. It's validating very nicely, but I haven't got a divergence here yet. But I'm looking out for a potentially some type of low, and I'm looking at the 618 extension here. So I'll use Fibonacci extensions in conjunction with the median lines to help with targets as well. But at this stage, I see support along this line, and I see resistance above here. And as soon as one of those starts to break, then I'll start thinking differently.
I see. Okay, so we're close to a very important area that the bonds could either launch some type of recovery rally or really accelerate to the downside.
Well, and I think that's where we are, Dale, exactly. And if you look at the yields, a slightly different picture there. You've actually got a horizontal boundary there. And, you know, you can obviously see a potential head and shoulders pattern there if it is. But the implications of that are pretty severe if yields start doing that. So all I'm doing is tracking this with the median lines, and the pink one is currently still valid. Everything's going up, but we need to really start breaking up above the blue one to give that you know, stronger validation. So it's at a pretty interesting point. It might all pull back from here, but if it does start to rise rapidly, I wouldn't ignore this.
Okay, Graham. Well, do you mind if I call you my median line trading warrior brother?
Not a problem.
Okay, and Graham, I want to thank you so much for a great tutorial.
No problem.
Edifying the FACE community today, and really appreciate you being being here and hope we could do this again down the road.
All right, look, I appreciate the opportunity, Dale, and thank you very much.
Okay, so people could follow you on Twitter at Trading Motive, and that's
Yes.
also the name of your website.
Yes, I've got the just the details there.
Okay, beautiful.
That's perfect. Well,
take a picture, everybody, and get a hold of Graham and learn about median lines, and then teach me.
That's
so
great.
Really, a great interview. Ed Schaefer's thanking you, Anthony thanking you. So you're well received, Graham. I appreciate it, buddy. I hope that pips and Kiwi dollars or whatever, or Bitcoins rain down on you and everyone you teach. And
perfect.
Hope that there's no more shaking, but looks like even some good things came out of that for you with your work.
Oh yes.
During the shake
Absolutely.
shake, rattle, and roll days. So thanks again, buddy. Great to
No
meet
problem.
you, Graham.
Same here. Take care.
All
Take
right, Face. That's it. Let me just take a quick look at the crude here. Let's see. Did it get up to 80? No, it didn't make the third drive yet. And so far, the cover on the short dollar looks okay. All right, everyone. Have a great day. See you tomorrow. Remember, don't just count your pips, count your blessings. And remember, if you need a new broker, contact Forrest Park FX Trent, and he'll find a good fit for you, whether you're in the US or not. Spreads, whatever your platforms, whatever your needs are, give Trent, send him an email, give him a call, and we'll see everyone tomorrow, hoping that Steve and Stelios get to Cyprus safely, and Greg is going to be with us tomorrow, so don't miss that. Adios, everyone. Thanks again, Graham.